Good morning, everyone. This is the second week of July, and we're meeting to give you the latest update regarding the market. We've discussed the closing of last week, and we benefited a lot from the market. So, Nour, we can see that the dollar index is back. We bounced back from the low. It did not continue today, at least until now. And we've seen that the unemployment data that came out on Friday, it was, let's say, better than the forecast, but less than the previous month, which affected the dollar, of course. Definitely the main event in this weekend is the election in France. And we've seen as we say, like there was kind of like a flip of the table in France, and this affected the euro. We've seen the euro open on a gap. Give me your insight on dollar and the euro election, please.
Here's the thing. I mean, the US data that came out on Friday, one of the most important things that people need to understand is basically first, they revised once again, it's the election years, it's the elections year, and they revised, the past 2 months data, they revised them. There was an error by 111,000 jobs that was not actually created. So for example, April was supposed to be above 100,000, it came in at 84. So that's one thing. The other thing, which is the most disturbing thing, is basically the unemployment rate is now at 4.1%. And this is basically giving us more indicators that basically the labor market is starting to see some sort of distress. And this is why, if you look.
Does that mean, just regarding the first information you gave us, you told us they revised the data, just so the audience can understand.
True.
So if we revised the data and we were giving the market as an idea that we are creating more data, it means we're pushing the dollar up, right?
Yeah.
So does it mean that the US or the Fed and whoever is revising the data, do they want the dollar strong and that strong? Because this is affecting them negatively at the same time.
I mean, not necessarily, because at the end of the day, I mean, the NFP in general is not basically not the most accurate labor market indicator anymore, because the amount of the revisions that they keep doing. Let's say, as an example, last year, each year they do also a revision for the whole year, and last year they basically revised. They said there was an error of 1 million new jobs. So last year it was supposed to be 1.8 million new jobs was created, and they ended up with 800,000. So imagine if the actual numbers back then was actually the correct number, the Federal Reserve would have basically cut its rates way too early. So it is basically pushing the dollar higher over the past few months. It was based on also revisions or the data that was not even revised yet, including inflation, because it was up and then they revised it lower, and then the actual data came in low. So that is kind of, if there's a lot of people would say that might be manipulation, that might be, but this is the information that we get from the government, so we can't really comment more about it when it comes to like why this happens or if they want a stronger dollar, because I mean it's a two sides. So that's from one side. This is why basically now the markets are actually pricing in more than 2 rate cuts. For example, September's Fed Fund futures today is pricing in 84% chance that the Federal Reserve will start cutting rates in September. So it's not about just a 1 rate cut anymore. It's actually 2 and more rate cuts. So that's from the jobs report, at least. So that's why the dollar index closed also lower last week, and this is could be a continuation of the previous trend. And of course, everybody needs to keep an eye out to 104 now 104.70 and followed by 104.40. In Europe, on the other side.
Gap.
The Euro gap, I mean, I think here's the thing. It was not like something not expected. We already knew that the far right will not be able to get a majority. But what was not expected, that there was no big majority in any of the parties. So now we have a sort of like a hung parliament. The centrist and the centrist and the left or the far left basically secured some sort of like a very narrow majority, but now the coalition, it might not actually go as planned between the the centrist and the left, and this is why this is basically might create some sort of distress in France, because now today the prime minister will be submitting his resignation to the president, and going forward we'll have to see what the government, how the government will look like, or the next government will look like, and this from there it will show us at least some sort of signs where the euro could be heading. But for the time being, don't forget that with the jobs report that we got, especially that the unemployment rate is up with the participation rate, this basically will continue to pressure the dollar, because the market will have to price in the Federal Reserve sooner rate cut in advance before it actually happens.
Okay, amazing. So just to talk about gold, because this is a subject that is really flaming nowadays. And we've seen that gold closed the first week of July positive, and actually it's super positive. We were able to see a higher high, higher low. We broke last couple of weeks highs as well, above the 90, the 2,390. Now we're doing some sort of a small correction, despite the lack of data regarding the Middle East and whatever is happening. Okay, we can see that we have maybe more hits, a bit more missiles going here and there, but there is no real threats. There is nothing happening different than the past 2 weeks. We're still almost in the same data feed here in this section. Definitely, the dollar weakness did benefit a lot.
It plays a huge role.
So, the huge role. And silver is acting the same way at the same time. Is there anything that we need to keep an eye on regarding silver and gold?
It's the 2,390, 93, 95. This is a very important area, because whoever was looking at the head and shoulder on gold, at least on the daily chart, now they're saying no. This is basically the right shoulder on the right side. It wasn't a few days ago. But I think, I mean, with this move, especially that it came in because of, and we talked about this last week. That gold, but that gold's rally might be more because of the dollar weakness, more than it's because of what's happening in the Middle East or geopolitical tensions. Because now you can see there's some sort of a wave in Europe that they might be going back to negotiations with between Ukraine and Russia. China did announce they did not add any gold for the second month in a row, but again, that did not affect much. Gold is down by $12 today. That's also nothing. So I think the main thing remains still in the dollar and what the Federal Reserve is going to do, including also silver. I mean, last week's close on silver is very positive, but now you'll have to keep an eye on the 3150, 3160s. That area is a little bit shady, but it needs to be broken to the upside to confirm a much better breakout. But one of the most important things for silver recently, they defended once again the 11 years breakout, and this keeps the bullish sentiment, let's say, for silver much more than gold.
Yeah, exactly. So, Nour, we've noticed as well that dollar indices and Nasdaq, S&P, we've already hit a new high. We're still toppish. We cannot see a proper correction until this second. So I believe that the market is continuing with the same way. There's a lot of flow going into indices. But I would like to mention regarding as well dollar yen, because we bounced back from the 162 level. Like from a dollar perspective, we did a proper correction. We bounced back to around 160.20 or 160.28. So these levels, we did a proper correction here at least. The trend is still up, but we did a correction. In less than a minute, can you give us a hint? What are the support and resistance that we need to keep an eye on S&P and Nasdaq, or at least the support?
I mean, S&P resistance currently. I mean, currently resistance, if you want to look at it, it's just basically the 5,600. That's I would say the first one. Support would be at least when it comes to 5,550, 5,536, which is the low of last week. Nasdaq is the same thing. I mean, we did close above the 20,000 again, and I think the first level I'll be thinking of is the 20,200, 20,300. That is still a possibility to go to. One of the most important things that also traders need to keep an eye on this week, we have the CPI. Although the CPI is not the main inflation gauge for the Federal Reserve, but it's still something to keep an eye on, because if we get another slowing down, that will confirm that the Federal Reserve will actually need to cut in September. However, the reaction might be a little bit different, because it will still increase the fears of a possible recession going forward, because the bond market is still sending us the same signals since last year.
And Powell is going to testify Tuesday and Wednesday at the same time. So we have Thursday, Friday, the CPI, and then we have Tuesday and Wednesday. So it's going to be an interesting week, I think. So
it will be interesting to see if he's going to confirm or say something about September.
Yeah, exactly.
Yeah.
I think they will ask him the question.
Yeah.
So guys, it's been a pleasure. We wish you a good trading week. Keep us posted if you have any questions.
Have a good day.